This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell by nearly $1 a barrel on Friday as comments from U.S. central bank officials indicated higher for longer interest rates, which could hinder demand from the world's largest crude consumers. Brent crude futures settled at $82.79 a barrel, down $1.09, or 1.3%. U.S. West Texas Intermediate crude settled at $78.26 a barrel, down $1, or 1.3%. For the week, Brent logged a 0.2% loss, while WTI recorded a rise of 0.2%. Dallas Federal Reserve President Lori Logan on Friday said it was unclear whether monetary policy was tight enough to bring down inflation to the U.S. central bank's 2% goal.
Chinese refiners will lift less Saudi crude oil in June than in May, people with knowledge of the matter said on Friday. The supply cuts come after the world's top exporter Saudi Aramco hiked official selling prices, OSPs, for most of its crude to Asia to the highest in 5 months despite weak refining margins. The volume of Saudi crude to be loaded for China is estimated to fall by 5.8 million barrels in June from 45 million barrels in May, the sources said.
Moving on to the top news in the energy sector.
The U.S. on Friday extended a license allowing certain transactions with Venezuelan state oil company PDVSA so American energy service companies can maintain assets after Washington last month reimposed wide sanctions on the OPEC member. The companies, however, remain prohibited from drilling, lifting, processing, purchasing, transporting or shipping any Venezuela origin oil. The license is being extended through November 15 and covers oil services Halliburton, Schlumberger, Baker Hughes, and Weatherford International plc, a notice on the U.S. Treasury Department's website showed.
Biodiesel and other renewable diesel fuel oils are displacing a small but growing volume of petroleum-derived distillate fuel oil in the United States, especially in California and other parts of the West Coast. The result of this policy-driven change is that manufacturing and freight activity is correlated with total petroleum and renewable fuel oil supplied rather than just petroleum distillates alone. Distillate fuel oils such as diesel and gas oil are overwhelmingly used in freight transport, manufacturing and construction, so consumption is closely correlated with the industrial cycle. Next, we have the top news in metal markets. Total aluminium stocks in London Metal Exchange registered warehouses rose by 88% to 903,850 metric tons on Thursday, their highest level since January 2022, daily LME data showed on Friday. Inventories have been subject to so-called rent share deals, sources said last month, with traders taking Russian-made aluminium from the warehouses and returning it at a later date to profit from rule changes. Total aluminium stocks rose on Thursday as 425,575 tons were deposited in Port Klang in Malaysia, the daily LME data showed. The data also showed reverse net fresh cancellations of 137,050 tons in the same location.
Copper prices rose on Friday as traders raced to capture arbitrage opportunities with growing gaps between prices in Chicago, London and Shanghai. Benchmark 3-month copper on the London Metal Exchange, LME, was up 1% at $10,003 a metric ton by 15:45 GMT and has gained 16% so far this year. But that still lagged behind a stellar 21% rise on the Chicago Mercantile Exchange, COMEX, allowing producers and traders to profit by selling to the U.S. market.
We will now look at the top news in the agricultural sector.
U.S. farmers are expected to produce their second biggest soybean harvest ever this year and expand the nation's supplies by 30%, bulking up record large global inventories, the federal government said on Friday. Forecasts for abundant supplies of soybeans and corn are keeping U.S. crop prices near 3-year lows, despite some production losses in South America due to extreme weather. Futures were higher after the government issued its forecasts. The U.S. has faced stiff export competition from top supplier Brazil, leaving more supplies at home. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.